The smart money not only knows how the markets work, they impact them in significant ways to their advantage and often to the detriment of your investments and your trading.
Welcome back to Investing with Confidence. I am your host, Joshua David. Always having a great time and talking about different techniques and concepts like market breadth with the CMT Scott Maraggiulio. That's a chartered market technician. And Al, as we get into this next topic here, we talk a lot about every single week about the smart money. And you kind of kicked the show off here today. They are creating these moves in the stock market. It's the big money is what does that. More demand, price is going to go up. More supply, price will come down. Now, they're utilizing multiple assets when they are creating income. They're not just trading stocks. They're trading options. They're trading futures. They're trading Forex. Why are they investing and trading with different assets and not just the stock market?
Well, because they understand the benefits of those different assets, and like anything that you do, you need to know how whatever that thing is works. There's usually a right way to do something, and there's a wrong way to do something, and you want to know what that wrong way is so you can avoid it. In the financial markets, the smart money not only knows how the markets work, they impact them in significant ways to their advantage and often to the detriment of your investments and your trading. So, first of all, the Online Trading Academy, the education there not only covers financial knowledge, that's how markets work, what the different assets are, how to help build skills to use that knowledge, but they also use what the smart money tells us. They're actually telegraphing things to us about their activities. And by doing that, you can trade, invest, and just act like the smart money. And the reason you want to do that, of course, is because they are consistently successful in their trading.
Well, a lot of people try to beat the institutions, and you can't beat them, and that's why it's important to join them.
Right? You don't have to, and yeah, you almost have to front run them to beat them, but we don't need to do that. All we need to do is just ride their coattails, just follow in their footsteps, and participate in some of the trades that they're going to be placing after they've initiated a trade. And we kind of go into more detail in our core strategy during these classes, explaining that and explaining how we do that. It's how they have to invest because of the amounts of money that they're investing, and that's what we can take advantage of. A lot of our students, though, now, Josh, are coming in, and they're saying that their primary goal is to generate more income. And let me define what we look at as income in the financial markets. That's just the net result of short-term trading that includes wins, losses, and commissions. Why did I emphasize short-term? Well, if you are looking for something to help you with current needs, it has to be something that you can access on a short-term basis.
Yep.
Wall Street typically will put their clients, and my guess is that most of the people listening to the show are in a portfolio that they have been told is a long-term type of a strategy. Hold on to it for decades. Don't worry about the drawdowns and the crashes. But that doesn't help you if you need something now. If you have some needs now, maybe an emergency, maybe kids that want to go through college without taking out a loan, whatever that happens to be. And trading for short-term needs is different than how you trade or invest for your long-term needs. And that's typically what Wall Street puts you into, the long-term category, even though you might have short-term requirements or needs. There are different assets and strategies that we help you identify that are going to be, kind of recommended based on what your short-term needs are. And short-term differs from person to person. For some people, it might mean daily. It might mean weekly for some. It might mean monthly for some. And there are different assets that are more appropriate for kind of each of those time periods.
Yeah, I'm glad you kind of clarified those different short-term strategies because, a lot of our listeners probably work during the day. They want to understand, okay, what can I do potentially in the afternoon, or what can I do before I go to work, or what can I do in the evening at night? Mm-hmm. And it's just understanding different techniques and different strategies, which the banks, the institutions, Wall Street, like you call it, the smart money, that's what they are using. So it's you have to understand how to trade and invest like them. You mentioned with different techniques and short-term strategies, you need to understand, first off, and then know how to trade different assets as well. So get into these different assets. What is the futures market? What is the Forex market? They're very similar in general, but they have some different perks, some different things impact them, different news events. Why are most investors that know what they're doing properly investing in these other markets?
Well, again, I mentioned that there are greater benefits with some of these strategies than there would be from just trading stock, for example. And now some of the equities that are out there are trading at such a high value that it's really hard for a lot of people to participate with enough shares to really be beneficial. Well, with the assets that we're talking about, futures, Forex, and options, one of the great benefits there is that they have leverage. And what leverage is, it's just using a smaller amount of capital to control an investment rather than putting up 100% of the cost of that investment. It's like a mortgage. It's like a mortgage, basically where you're leveraging a small amount of money, a down payment or deposit, into the buying power of a larger mortgage. And you can do the same thing in the financial markets by using these leveraged assets. Basically, what you're doing is you're taking every dollar you have, and then you're just multiplying the power of it, maybe by 10 times or 50 times or 100 times, depending on the asset and the strategy you're using. But that's one of the reasons that the smart money uses these assets, because there is that great leverage. It's just a smarter use of your investment dollars. One person who uses these assets and really doesn't tell the public about it is Warren Buffett.
Yeah.
Warren Buffett makes a lot of money trading options, a certain option strategy. And futures, for example, is a great short-term trading strategy. If you have maybe daily or weekly needs, futures typically is going to be a very short, probably the shortest time frame trades that you're going to be involved with. And basically what you're doing is exactly what it says. You're looking at what something is worth in the future. And it could be the major stock markets. It could be commodities. And I would be remiss if I didn't let you tell us what your favorite one is.
We always got to talk about lean hogs.
It's lean hogs, but that's just one.
We still don't know why that is my favorite.
I have no idea. I'm not so sure I even want to know why you like lean hogs. But there's sugar, there's corn, soybeans, a number of different things like that. There's oil, there's precious metals, there's currencies and interest rates, a lot of things. I mean, this gives you an opportunity to participate in a lot of diverse kinds of investments that in fact give you great diversity.
Well, the great thing as well, Al, is you can still participate in the stock market. You have the S&P 500 overall, the Dow, the NASDAQ, the Russell. You can still participate in these
some
markets.
Foreign markets, right?
It's just at a much bigger scale, which is what you want to be able to do because you have that leverage.
Right. And I think the real benefit there is that you can increase your rate of return by using these leveraged assets. You have the opportunity or the potential to be able to do that. And then the foreign exchange market, that's where you're looking at the difference in exchange rates between two different currencies. Great way to play the global market.
Yeah, more diversification that way, too.
Right. And both futures and Forex are open basically 24 hours a day. You had referenced earlier being able to choose when you trade and invest. You can do that with futures and Forex.
Yeah, that's the great thing because most people, I'm assuming, work during the day. And the stock market hours, you're limited to 8:30 till 3 o'clock our time. Right. We're here in Minneapolis. And having these multiple assets, you have diversification, there's hedging strategies with them, with portfolio management. There's so many opportunities with these other assets that most people just don't understand about.
Right.
And if you feel like you're missing out on some of these opportunities, it comes to knowledge, like Al talked about in the beginning of the show, but then being accountable, taking action also with what you want to do with your investments. Al, coming up next, I want to get into the options market, what those are. Everybody knows there's calls, there's puts, there's a lot of different techniques with that. Coming up next, options and retirement plans. This is Josh and Al, Investing with Confidence. We'll be right back.